Good morning, everybody. Hey, welcome to Wednesday. Yesterday was a mixed day with the Dow and the Russell 2000 down. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you're paying and having in your portfolio versus the amount of risk you should have in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
105.7 Light FM. That's Faith Hill there, and I love the way you love me. It's 8:43 here, 17 now before 9. Phillip, here we go.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
You really should do that, and we suggest Phillip Statler from Statler Financial Services in downtown Sebring, who is on the phone with us right now. Phillip, I kind of cut us short there. I didn't realize I had such a short record on. How are you this morning?
Hey, doing well today. Yesterday was really kind of a mixed bag with the S&P 500 and the NASDAQ coming in positive, but the Dow and the Russell 2000 just could not get out of the red yesterday.
Not quite. We did manage to hit a new record, I think, on the S&P, and I'm not sure, but I think NASDAQ was a new record as well yesterday. We actually had a good day. NASDAQ was up 146. S&P was up 9.5. Dow, on the other hand, fell 155 points, and when we get to Alphabet, they kicked butt. I was saying, okay, how'd they have such a good one that they couldn't overcome the Dow? Oops, I didn't realize that Google, the people that supply about 80% of the cell phone operating systems in the country, the biggest search engine in the world, and one of the biggest cloud services, they aren't even on the Dow. I didn't realize that. I went through the Dow 30 and said, whoopsie, Google isn't in it. That kind of surprised me.
Yeah, no Google in that list. I mean, we got some tech stuff in there, but not Google.
Oh, yeah, we got a lot of big companies, don't get me wrong. I'm not saying that, but I was just kind of surprised that Alphabet wasn't in it. We start the morning out with that mixed bag to begin with, and our data dump kind of gives us no guidance as to which direction it might go either, because I got one bit of good news and one bit of bad news. The good news is private sector hiring. Now, we always say ADP never has the numbers right because it's a snapshot from their clients, but they do a pretty good job generally giving us a direction. We were expecting 100,000 new private sector jobs reported by ADP this month. They reported 233,000 new jobs and then revised a couple of prior months upward as well. All of a sudden, the employment market is looking like it could actually be even approaching overheating, doesn't it?
It does. I mean, that was a big surprise. I guess you say to the upside. So we'll see though how the markets handle that, because does that mean our economy is growing faster than what we think it is? Are we, there's just some implications there that folks are going to have to weed through. The economists are going to have to weed through and figure out how that's really going to affect our markets.
Absolutely. The other thing that kind of puts a little bit of bloom off of the rose of an overly hot economy is we got the first look. We got the this will be the first look at the third quarter gross domestic product. It was 2.8% reported. Now, they were expecting 3%, so we got a little bit of a disappointment on the gross domestic product with a pleasant surprise to the upside on the employment side of the fence. I was asking you which direction the market seems to be responding immediately, and you weren't seeing a really big knee-jerk reaction in either direction originally, were you?
Nope, still not. No, nothing really major happening on the futures this morning.
All righty. The other report that comes out first thing on Wednesday mornings is the mortgage applications. That really isn't much. They weren't. I didn't have an expectation on it, but last week we dropped 6.7% on mortgage applications because things didn't change all that terribly much over the week. The mortgage rate still stayed up by a little bit. 0.1% decrease in mortgage applications. not probably going to be a market mover at all. But the big market mover at the end of the day yesterday was Google absolutely kicking butt and heavily on cloud revenue, which I noted was the thing that gave Microsoft a chink. Which one was? We had one that reported, and they were a chink in their armor on cloud revenue back a couple of weeks ago at the beginning of earnings season. Google is evidently kicking butt with it, huh?
They did. They really had a really good quarter. I mean, one of the things I looked at was the year over year. Cloud revenue was up nearly 35% year over year. That's a pretty big increase in that service. And you got the Alphabet, the new chief financial officer saying, they're going to still continue to work on cost cutting efforts. But they came in at $2.12 a share versus $1.85. Revenue beat by about $2 billion overall. They saw increases ahead of expectations in YouTube advertising, Google Cloud revenue, and in traffic acquisition costs, all well ahead of expectations. They said that the quarter revenue grew by 15% year over year, stronger than the same quarter last year. So some good things happening there with Google and Alphabet. And so we looked there, and they're up 6.7% this morning before we get trading.
Which explains a good chunk of the NASDAQ increase from yesterday, because they are one of the heavies on NASDAQ. The tech flood continues, by the way. This afternoon, we're going to end up seeing Meta and Microsoft both reporting after the bell today. So it's for all the other companies reporting, it's also a very, very heavy tech week, and that might breathe a little bit more excitement into the Magnificent Seven sector, won't it?
Yeah, it very well could. And we have a chip company that reported as well. Advanced Micro Devices reported. Not such good news for them. Their estimates came in, basically earnings came in as expected, while revenue topped estimates. However, when looking at the fourth quarter expectations, there's some disconnect there on what they're thinking is going to happen this current quarter. So they're trading down 7.7% this morning.
If memory serves, AMD is not a monster in the reduced instruction set chip industry, and I think they're starting to pay the price for trying to clone Intel every time they turn around.
It could very well be that's what's really starting to take effect there. And we had some other big misses on Eli Lilly. They earned $1.18 versus $1.47 expected. So miss there, miss on revenue by, let's just call it a little over $500 million. And that's got them trading down 10.6% this morning. Follow that by Caterpillar. I mean, and Caterpillar's in the Dow 30 now too. So this is putting some pressure on them because they're down this morning. They missed on earnings. They came by about 17 cents a share, came in at 517. Revenue fell 4% year over year for them. And so, and they expect weaker than expected earnings for the third quarter. So they're trading down almost 3% this morning.
And that would explain a lot of the Dow's losses, because one little change like that can really mess with the Dow as price weighted as they are.
It can, but Visa kind of offsets them, right? Because Visa's in the Dow 30 as well. And Visa reported, and they beat. They came in at $2.71 a share versus $2.58 expected. Revenue was about $200 million more than expected. And they raised their dividend by 13% to 59 cents a share. So they're trading up almost 3% this morning.
Okay, well, we'll balance it off down the line, and that'll kind of show why we're not seeing that wager movement this morning on the futures when we get to them. What else do we got for the morning?
So we got a local restaurant, Chipotle's reported, and so they had weaker than expected revenue for this last quarter. Their same-store sales missed one of the key metrics, which is same-store sales. So it increased by 6%. The expectation was it should have increased by 6.3%. So that's got Chipotle trading down about 2.5% this morning.
And they're not a cheap stock if memory serves.
No, they're not. Well, I take that back because they did a 20-for-1 stock split.
That's right. I remember that a few months ago,
And
didn't
so
they?
now they're like 59 cents a share, 59 cents, $59 a share right now.
Okay, that's still not a cheap stock, but at the very least, it got it down to the mid range.
Yeah, exactly. So that's some good news, all that.
Sounds good. Other tidbits that I heard about, I caught the notion that Pfizer reported and they increased their guidance, talking about the other pharmaceuticals that are having some difficulty. Evidently, Viagra is still selling pretty well. They raised their guidance by $1.5 billion before the end of the year. That ought to help a little bit.
Yeah, and it shows maybe less reliance on the COVID vaccine too.
Yeah, that was the other one. The other COVID makers really had a rough quarter when people weren't taking the vaccine as much. So Pfizer's good news to be supporting themselves with other products. Looking back at the table, it was, again, an off day for the blue chips yesterday. The broader indexes had a pretty good day. Can we continue it this morning? What are we looking at 45 minutes early?
It's going to be a mixed bag at the open today, Dave. The Dow is still trading down a little over 0.1%. S&P 500 is flat right now, and the NASDAQ 100 is down less than $5. So it's going to be a mixed bag to start today. On the other side of the coin, we got silver down almost 0.6%, while gold is up almost 0.5%, trying to get to $2,800 an ounce. It's $27.95 right now. And then crude oil is up 1.75% to $68.36 a barrel right now.
And I'll take a little up and down under 70, so let's just keep it down in that range, shall we?
Yeah,
looking at the overseas markets, it was an off day on the Asian rim, just pretty much across the board. Hong Kong was down by over 1.5%. Mainland Chinese markets, evidently the bloom went off the rose from yesterday's close because they were down by over 0.5% as well. European theater has us with a mixed bag, but mostly with a red tinge this morning, pretty much led by the Italian and the German markets, both well over 1% down. So are the French markets. The UK is about the only one with any green ink. Average across the European community, a little over 1% down halfway through their trading day. Getting my retirement together takes a plan, and it doesn't matter how old you are. Having a plan just makes the plan more sure. How do I find you to get that plan going for me, Phillip?
Then give us a call at 863-382-0037 to schedule their core retirement analysis, where we'll help them determine if they're on the right track to the retirement they always dreamed of. And then catch our Statler Financial Radio Show 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning on Light FM with news and information up to the minute and a whole pile of tech stocks to report, right?
Absolutely, man. Got a lot coming.
I'll see you then. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day and join us again tomorrow. Same time, same place. See you then. Bye now.